Hello everyone, thanks for checking out my video. All four major US indices fell last week. Dow Jones fell 0.17%, S&P 500 was down 1.1%, Nasdaq lost 2.4%, and small cap Russell 2000 dropped 3.4%. Is the stock market rally losing steam? Looking ahead, the highly anticipated CPI data is coming out this week, so what does it mean for the market? Technical wise, last week I shared about a bearish shooting star pattern on SPY daily chart, and then SPY retreated for the week. This week, a similar shooting star candlestick has been spotted on a mega cap stock. Which one is it? Stay tuned to find out more. The stock market had its first meaningful pullback since the start of the year, as major indices ended the week with losses for the very first time this year. The US dollar, which recently hit a 9-month low, has rebounded more than 2.5%. In case you're not aware yet, the US dollar tends to have an inverse relationship with the US stocks. Therefore, when the US dollar rises, stock market usually falls. This is because a stronger US dollar will affect companies' overseas revenue, as they are forced to convert a weaker foreign currency to a stronger US currency. Lastly, something interesting happened last Friday. The US revised November and December CPI numbers slightly. Basically, both were revised upwards by 0.1%. Specifically for December, the consumer prices actually rose as compared to the month before. This brings me to the next point, market outlook. So with the latest revisions in the CPI numbers, it actually raised the risk of higher inflation figure in the months ahead. Okay, let's not talk about months ahead from now. The immediate hurdle is this Tuesday's CPI report. Don't forget, the current sentiment and expectation of many investors and even economists are inflation should continue to trend lower. In fact, this is what the Fed has also commented, that this inflationary process has started. However, here's a caveat. Yes, inflation is going down gradually, or the so-called disinflationary process has begun. But then it may not be trend down in consecutive months. There could be 1 or 2 months that the inflation number ticks up again. When that happens, ask yourself this: how will the market react? Panic sell? To be honest, we don't know, but I just wanted to say that the risk is there, and bulls or FOMO investors of the current rally need to be aware of this. Anyway, other than CPI inflation report, we will also have the weekly jobless claims report and January retail sales number coming up. This will give us more sensing on the consumer spending power and also how is the job market doing. As a gentle reminder, the US economy added a stunning 517,000 jobs last month. Well, this is definitely good news for the citizens, but it could be a bad thing for inflation, as this strong job market could fuel higher salaries and consumer spending power, which could in turn cause inflation to go up again. Okay, moving over to the technical analysis section. Last week, I shared that a bearish shooting star candlestick was formed on the daily chart, and the probability of a pullback was higher than previous weeks. Guess what? It really happened, and SPY retraced by about 1%, falling from about 412 to 408. Looking at this week, I would say it's quite a crucial one, as it may potentially set the direction of the US stock market for the next 3 to 4 weeks. Keep an eye on the CPI number on Tuesday and watch how the market moves. If inflation ticks up and market decides to go down, I think SPY could quite easily fall towards the red dotted down trend line, as well as the 50 moving average, which ranges from 392 to 395. Overreaction from the market will likely see us retest the 200 moving average at 391. Meanwhile, I thought to highlight something for the viewers, and that is MACD just had a bearish cross. Well, of course, we cannot rely on just one indicator to determine the overall trend, but just keep this in mind, okay? So if we print another 2 or 3 red candles, we could be in for the multi-week decline. When that happens, we could easily test 385 support level. And just to highlight, if SPY were to fall from the current price of 408 to low 390, that's more than 15 points of downside, which is a lot for S&P 500 context. But of course, if CPI report gives us further confirmation that inflation is indeed cooling, then market could potentially go up. When that happens, this means that the recent pullback is just a temporary healthy pause to the rally before we fly higher. On the upside, we are looking at 423 resistance as the first potential profit-taking zone. Even if SPY gets rejected at that area, from the current price to 423, it's still a good 15 points upside. So if bulls can ride this uptrend, they could be in for some good profits. And oh, something potentially positive for bulls to cheer about, it appears that a bull flag is forming on the daily chart. And if this pullback is indeed a healthy one, then we could have a breakout from the 408 level. Personally, I would not care too much on how the market moves on Monday. I will observe how it reacts towards the CPI number on Tuesday, and I will use 408 as one of the key levels to watch, be it as a resistance or support level. It will be quite an interesting week ahead. Alright, let's check out Apple's technical chart. Last week I shared that Apple has been hugging the top of the Bollinger Band for some time. And there is a good news for bears, because when such thing happens, a retracement is usually on the card. And Apple did trend downwards a little by creating lower highs for the last 4 consecutive trading days. So for those who have benefited from my video, I hope you can help me with the like and subscribe buttons. Thank you very much. Okay, similar to SPY, there seems to be a bull flag forming on the chart, but it has not been confirmed yet, okay? Good CPI report could be the catalyst to bring it up. Watch out for this bull flag. Apple needs to trend higher by creating higher highs and pop out of this flag before it can have a full-blown breakout towards the recent high of 156 or even higher. Personally, my take is that if the bull flag is formed and Apple has a breakout, we could charge towards 163 actually. Again, the caveat is the bull flag has to be formed, okay? But just 2 quick disclaimers. First, nothing is guaranteed. I mean, let's bring you back to June to August 2022 again, where Apple went on a parabolic run, retreated a little bit, printed a huge red candle, and plummeted. Secondly, let's say the bull flag pans out and Apple wants to fly towards 163, it still needs a bit of time to do that. In other words, don't expect Apple to immediately hit 163 on Tuesday or Wednesday, even if the CPI number is favorable. On the downside, we have a relatively strong support at 147 where the 200 moving average is. It also coincides with the gap between 146 to 147. Even if Apple breaks below this area, I will not be too concerned if I am a bull, as there are further support levels at 143 and also the downtrend line, which is around 140. But if 140 gets breached, then bulls should be worried as we once again enter the downtrend channel. This is also where I will be queuing to pick up some shares at 130's range. Alright, moving over to Tesla's chart. Tesla has a huge pullback of 5% on Friday, but it's not something that we should be alarmed because it's completely normal for Tesla to move up and down like 6-7%. I mean, by now you should know that's how volatile Tesla is, right? Okay, remember at the start of the video, I shared that I spotted another shooting star bearish candlestick on the mega cap stock? Now let me bring your attention to the weekly chart of Tesla. There you go, a shooting star pattern. Interestingly, there were 3 other occasions where a similar pattern was formed on the weekly chart in the last 2 years. We had one in December 2021, one in April 2022, and one more in August 2022. Each and every time when this pattern was formed, Tesla trended downwards for the next few weeks. Well, not saying it will happen this time, I am just presenting what I saw to you. Please don't shoot the messenger. Jumping over to the daily chart, if you look carefully, we had a shooting star-like pattern too that was formed last Thursday. And the next day's candlestick sort of confirmed the reversal trend. I can't be super sure how this will turn out, but the probability of bearish move is higher than bullish move for now. So let's say if the bearish thesis pan out, we could potentially slide towards 162, and boy, that's about 35 points downside from the current level. It does sound a little scary, although nothing is guaranteed. And if that happens, bulls, please be careful, as the gap between 146 to 154 could act as a magnet to pull Tesla further down. To add on to this, if I were to put the last 3 candlesticks together, it looks like a bearish abandoned baby pattern to me. It is also a sign of at least a short-term reversal from the current uptrend. This pattern is quite unique and rare, and the probability of a reversal is generally higher than other bearish candlesticks. Okay, enough of the bearish sentiment. Let's say I am completely wrong and Tesla decided to fly upwards. Let's check what are the confirmation or indication we can look out for. First up, it will be the resistance level at 222 as well as the 200 moving average at 226. I believe this will be an area where traders will start taking profits. Even if so, that's about 30 points upside from here. And if the bullish momentum remains strong and we overcome these two resistance levels, wow, we may see Tesla grind up to around 250's range. That will be quite insane actually. Anyway, I'm just presenting what I saw on the chart. Feel free to extrapolate what you think is relevant and then do your own research before you trade or invest. Alright, now let's hop over to Google. Google plummeted after a blooper during their AI demo. Feel free to Google it for more info on the event. Anyway, since Google hit 108, it has fallen below two support levels, namely 105 and 100. It then even went down to fill the gap at around 93. To add on, MACD had a bearish cross. Overall, the chart is looking quite bearish at the moment, and there is further room to fall in my opinion, till around 90, where the next support is. But let's say Google somehow managed to recover for whatever reason, could be good CPI number or just because the whole market wants to rally, then the earlier support of 100 and 105 will now act as resistance levels, together with the 200 moving average at around 104. But to be very frank, at the moment it does seem like an uphill task for Google to reclaim those levels, and hopefully the covered call that I sold can expire worthless. So basically, I will need Google to stay below 103 on 24th Feb. Lastly, let's do a quick check-in on Meta's chart. Okay, for Meta, it has fallen below the support level of 185. As per my last week's video, I have cautioned about this huge gap up, and there is a likelihood that Meta will fill some, if not the entire gap soon. At the moment, Meta looks very overbought on the RSI, and it seems like it's trending downwards. So if the sell-off continues, we could really fill the gap with support at around 151, where the 200 moving average is right now. If we hit this level, then the huge gap will be completely filled. On the upside, it needs to reclaim 184 and stay above it for a while, then the chance of us heading towards 220s will be higher. At the moment, the market pullback or retreat has not been too alarming, and if anything, it looks pretty normal and healthy to me. If you recall, I shared that from a technical point of view, a pause after a fierce rally is needed. To add on to that, the later the pullback comes, the bigger the fall we could experience. Therefore, I thought this retracement comes at about the right time. At this point, I would urge investors to take a step back to understand what might have fueled the recent rally. I would think the common sentiment is that inflation has showed signs of cooling. To add icing on the cake, our dearest Jerome Powell also have encouraging comments on disinflationary, which further sparked optimism in the US stock market. Okay, so now we need to ask ourselves, what if inflation hasn't really cooled per our expectation? What if Powell changes his mind like he always did? These are the potential risks and headwinds we all should bear in mind. One potential telltale sign or red flag was the revision of the past CPI numbers to the upside. Anyway, my message is not to predict the next CPI number, okay? It's more of constantly remind ourselves of the potential headwinds. No point guessing whether the CPI number will be higher or not this coming Tuesday. Just let it be announced and watch how the market reacts. The next movement will likely set the tone for the market all the way till March, where the next interest rate hike will be announced. On how to identify the next direction, go back to my technical analysis segment and keep an eye on those support and resistance levels. Identifying trend is really important if you want to earn some side income through trading, so here's a quick sharing of my option trades for the last 3 months. Well, if you have been following me, you will have known that I went bullish in November and December period when the market was bearish. Remember, that was when Tesla was facing capitulation and fell like nobody's business. That was when I saw a few put options, which is a bullish move, and reaped some profits in January this year when the market turned around. And then in January, when the market was rallying, I went bearish when it was overly bullish. I did so by selling a few call options, which is a bearish move, and the trades are showing profits right now. Meanwhile, I am observing and waiting for the next trend before opening up new option positions. Not financial advice, but I am eyeing Google quite closely as I felt that the market has overreacted to the downside as a result of their AI demo blooper. Some form of rebound could be on the card, and hence it is a potential opportunity to sell a put option. By the way, option trading is a risky activity. Do not follow me blindly. And please do your own study and research before you start trading options. And oh, if you like such content on my option trades, do comment in the comment section below. Anyway, in the coming 1 or 2 weeks, we will likely know if the current pullback is going to stay within a healthy range or is it a start of something bigger. What do you think? Let me know in the comment section below. By the way, can you also help me tap the like and subscribe buttons please if you have not done so? Thank you.